This is Noel McIntosh with McIntosh & Associates here for your market update for the week. Well, markets climbed upward despite the noise. Financial markets exhibited resilience last week despite ongoing geopolitical tensions and uncertainty surrounding the Federal Reserve. The principal concerns included stalled negotiations with Iran, developments from President Donald Trump's meeting with Chinese President Xi Jinping, and the appointment of Kevin Warsh as the new Fed chair. We had a rough start of the week, mostly due to unresolved Iran negotiations and a lack of progress in talks with China. Tensions in the Gulf have continued to impact regional traffic, and talks with Iran don't seem to be making much progress, much like the situation with China. Still, markets pretty much ignored these political developments, rebounding midweek after Nvidia revealed better than expected earnings and closing higher ahead of the Memorial Day weekend. It's a sign that corporate earnings and economic data will always remain relevant data points for investors. Well, Warsh was sworn in, so what's the next for rates? Well, now that Kevin Warsh has been confirmed and sworn in by President Trump to be the new chair for the Federal Reserve, where do we go? The president didn't appoint Warsh to sit on his hands or raise rates. Unfortunately, that's precisely what needs to happen. Well, maybe not the next raising rates part yet. We've had an energy-induced inflation spike, which could subside any moment, so raising rates right now seems premature. Earnings have been great, and gross domestic product is at 2%, which is remarkable given all government's shenanigans. Jobs are pretty solid, and for all the talk about affordability, there were record numbers of travelers flying and driving around the country to kick off the summer. The obvious bet is that we leave rates where they are. However, once the Iran situation calms down and oil declines to pre-conflict levels, President Trump will once more resume his calls for rate cuts. The challenge for Warsh is that inflation won't drop as quickly as oil prices, and we could have elevated inflation for months after the crisis is resolved. We'll also likely have divided Fed, with some arguing for tighter policy as President calls for easing. Coming this week, markets were closed Monday for Memorial Day. The only data point on Tuesday will be consumer confidence. It will continue to be lackluster given current events and gas prices. We'll see MBA mortgage applications on Wednesday. Thursday will feature weekly jobless claims, and new home sales for April. Friday will be the big day for data. We'll get personal income and spending, plus the second reading of the first quarter GDP. Then we'll get personal consumption expenditures, the Fed's preferred measure of inflation. Last month, PCE was 3.5% year over year, and the consumer prediction for PCA to go up to 3.8%. Almost all earnings for the S&P 500 are in for Q1, with 94% of S&P 5 companies reporting results, 84% reporting positive earnings per share, and 81% reported positive revenue. Earnings growth for the first quarter was 28.4%, up from 11.9% last quarter. If 28.4% is the actual growth rate for the quarter, it will mark the highest earnings growth for the index since Q4 2021. Valuation is still historically high for the S&P 500, with the forward 12-month price-to-earnings ratio at 21.1 versus 22.2 last quarter. The PE ratio is a little higher than the 5-year and 10-year averages. Well, that's it for your market update for this week. We'll look more for your inbox next week for market updates as well. Any questions, give us a call, 989-692-2200. Or, again, plenty of resources at focuswealthplan.com. Have a blessed week.